Hello guys, welcome to the Trading Parrot. A bunch of very critical things are flagging now in the market and we do need to speak about it. Starting with the DXY, there's a sweet moment that we could take as an amazing opportunity, but not just that. Today we are going to cover a bunch of indicators that they can help us understand exactly where the market could be heading next, including fair value gaps, order blocks, the BitFimex longs and shorts from futures, which are giving us extremely interesting insights on where the people think we are going. We will cover CME gaps, the downside potential from where we are, divergences, market dominance, and a lot more. So first of all, this pattern. As you can see here, we have 4 full bear market on Bitcoin on the top of my chart. If you notice, every time we are in a bear market and we are in a strong downwards movement, the dollar is going higher. That's no longer news. Everybody knows that nothing can really perform when the dollar is pumping, especially risk-on assets. In order for Bitcoin to gain momentum, it requires the dollar to stay at the same levels to go sideways or to fully dump. But better than looking at the price of the dollar is to apply RSI to the dollar and then do the analysis on the momentum that it shows the RSI applied to the dollar. For example, in this bear trend of Bitcoin there, we can see the RSI is coming up. And the moment that the RSI breaks the trend line, which is located more or less here, then it's almost only up. And the reason for that is because many investors, they are looking at the strength of the dollar to decide when they're going to do risk on assets. And those same investors are influencing the Bitcoin investors. Let's look at 2014 and 15. It's exactly the same thing. The dollar gains a very strong momentum. It reaches a top right there in the price. And at the time it starts going sideways or collapsing in the price, it allows Bitcoin to start moving to the upside. In 2017, it's the same thing. The dollar was increasing in value, the momentum was going higher, and once it breaks down around here, you see the bottom of Bitcoin, and then things start going up. Of course, here we have the anomaly of the COVID because it's a global pandemic, but ultimately we have a very similar pattern in the current cycle. We see a parabolic move of the DXY that is being held by this trend line here in terms of momentum, and we are right now testing the trend line exactly at this spot. What do I want to see? I want to see this trend line broken, tested, and then coming back to levels around 50. That's why I have my alert there at the level 50 of the RSI applied to DXY. If we go back to the previous cycle, at the time we broke this level and we tested the 50, we're exactly at the bottom, and not just the bottom, but the last bottom. So that is the sweetest spot to enter before a bull market. Of course, investing is risky and this is not financial advice, but that is the alert that I'm planning to use. In my previous video, I mentioned that we got a buy signal around here on the NASDAQ. The Hive expected a move of 3% to the upside, but actually we have a 5% to the upside. In the rest of the video, I'm going to look at how sustainable it is to keep going higher right now at the current levels based on technicals. If we look at the CPR model, the monthly, we can see that we managed to get just up until the top level of the pivots. We got rejected by the dollar at 22.360. Hitting the bottom of the pivot and getting rejected from there will have thrown us directly to 17.9 or any of the lower levels, depending on the strength of the sellout. At the moment, we can see that we are gaining some bullish momentum. Some of the things that I can mention are we have conquered this cluster of volume located at 21. We have retested it right there and we are above it. Also, this upwards trend line support was reconquered. This bear flag, the larger bear flag, originally had a target of almost 9K. So coming back inside this bear flag is actually a good thing. You might argue that this area here was a fake out to the downside. So staying above this green line is a very good thing to do. Now, what will give me much more confidence from where we are based on the CPR model is if we manage to hold above the September top pivot. That will allow us to move at least until 23.6. Now, just so you know how CPR works, every time we are in a bull market, the price bounces above the pivots every single month, and at least it manages to conquer the first resistance. As you can see here, it's conquering both resistance every single month. That is a very bullish period for Bitcoin. Of course, in 2021, after July, we also got in a similar mood, with the exception of here, where we didn't conquer the second resistance. So if we wanted a confirmation that things are really, really bullish, we will expect the Bitcoin price at least to conquer the first resistance. Full-on bull market, then we are forced to at least conquer 27K. And I don't think we are ready for that personally. This trend line is extremely, extremely important. This one is formed by each of the weeks. We bounced there, here, and then we stayed here for around a week before breaking down. We found support on the yellow line, and then we are managing to come back here. But what's going on at the moment is we are getting rejected by this line. So from the point of view of this trend line, we could see some weakness if we don't manage to conquer it down to the red line. If we have a big dump from where we are, we could be visiting the yellow line as well. Of course, that will cause a lower low in the price. That will be below the previous low. In terms of volume and support and resistance, I have marked here in this chart all the levels that I find really important. The largest area of volume in this whole chart, which is 800 days, the highest level of volume is located at 21K, and we are now above that level of volume. That is really, really good news. If we manage to hold above this 21K, the next levels that we need to conquer, and they are a must to conquer, is first of all this downwards trend line right here, formed by this top and this top. The level is exactly located at 23.6. If we carry on with this bullish momentum, we're going to have to ask for permission to this trend line to be able to get above it. We also have a cluster of volume coinciding with that level. So there's two things there that's saying you won't be able to pass 23.6K. I will personally treat it with a lot of respect. At the moment, the price of Bitcoin is very overbought. I will expect some sideways consolidation here before we get to 23.6, but nothing is impossible, and if it happened that we pump to that level, this could be a level where people are actually going to close some longs. And in terms of fair value gaps, which are levels that are not touched by any other week, also called imbalances, they act like a magnet. And we have a green one there and a very thin one at 23.6. So potentially Bitcoin will get attracted by these gaps, these imbalances, and will try to fill them. We are leaving behind here a massive fair value gap from 21 to 19.5. So that area there is going to act like a strong magnet. From the past, we have these other levels as fair value gaps waiting to get filled. Not all the fair value gaps get filled immediately. Sometimes it takes many months, if not years, and some of them never get filled. Let's look at the order blocks. Order blocks are areas of strong demand and strong supply. The green ones here are areas of demand. Thanks to the demand that we had there, the price managed to pump all of this. In this area, this was an area of supply because exactly there, the price dumped heavy. This is very good news. A lot of volume, a supply zone that got completely broken out. And we have here something coinciding. We have another area of supply located at 23.6. You see how the numbers, they repeat constantly. This is an area where you can expect that people are going to want to sell to take profits. That's why the price slowed down. So it paid respect to the supply area, but still the demand was bigger than the people selling, and it managed to go beyond. At the moment, we are on top of the supply area. But make no mistake, if this was a fake out, and the price enter the supply zone again, we might see another dump back into the demand zone here, or the next demand below, which is at 18 to 17.6. Liquidations and ratio of longs versus short. Very important that we cover this today. As you can see, the price is entering right now and has already broken into the area where the 100x leverage positions are getting liquidated. 50x, 25, 10x, all of them are having a tough day today, and they're probably in risk of liquidating or already considering close down the position at a loss. If they do close a position at a loss, that's gonna catapult the price even higher and put at risk the rest of the levels that have lower leverage. I want us to focus right now on this massive pump in the ratio of longs versus shorts. What's going on? What can bring this level so high? There are two things. Either there are too many longs or too many shorts are gone. Which one do you think it is? To answer that, I look into this chart. We have the longs from BitFimex, and we have here the shorts from BitFimex, and we have RSI applied to each of them. As you can see, the shorts are coming down aggressively. This is a dump of shorts of 75%. 3/4 of the shorts have closed their position at these prices. They are freaking out with this movement of Bitcoin, and that's a good thing. We might have thought that maybe there's too many longs now because the ratio is going high so fast, but the longs are just slightly increasing by 1%. So there hasn't been many new longs in leverage positions. It's just that too many shorts leverage have closed their position, and there might be more to come. Now this looks very small, but if we look back in the past, we can see some other areas where the shorts, they close down their positions very aggressively. One of them, and I'm cherry picking here, is this one that catapulted the price in 2021 by 127%. It doesn't need to happen every time, but I will say most of the times when there is a swap in the trend that is quite big, it also coincides with the shorts freaking out and closing the positions very quickly to prevent getting fully liquidated. The most recent time this happened was this dump in shorts of around 80%. That happened around March this year and made a price move of almost 40% from the low here to the top there. CME gaps. These CME gaps, they play out incredibly well. If you look at this chart, you can see all the gaps. Most of them, they get filled. Now, getting filled doesn't mean that it covers the whole area. For example, here you have a gap and the price comes just to the mid price in the gap. That is enough to consider it filled from one point of view. Some gaps take very long, like this one took 550 days to come back to that level and fill it. And we have one at 9.8K hunting us there, wanting the price to come and fill it. Now, if we go more recently, what's going on here? In this dump, we left a gap behind on a weekend, the price carried on going down, and it was a massive opportunity. It got filled full. Now we are leaving behind here a gap between 21.5 to 21.3. So I don't think it's out of the question to say that the price that is running very hot could come back down and fill this area. Not to mention that here is full of fair value gaps as well. All of them together, they're going to be attracting the price on the way down as well. Keltner channel in the whole bear market, if we call the bear market start on November 15, has visited the top of the Keltner channel only 8 times, and every time it touches the top of the Keltner channel on the daily, it sells out. So this is a word of warning. Right now, we are touching this level. Now, what am I looking for to say, okay, this is enough, this is really gonna sell immediately from here, is this sort of candles. These candles with a big, large wick to the upside, they shout bearishness. They shout that there's going to be a pullback in the short term. So far, we are here, but monitor this candle, this daily close. If we get a daily close with a large wick to the upside and a small body there, right next to the Keltner channel, that could indicate that is the time to come back down and fill these gaps. Now, if the downside momentum became really large, if there were bearish news and the DXY made a higher high, what are the levels that I'm looking for? I'm looking for the levels of the 300 weekly moving average. That's the only one that we haven't touched yet. At the very least, we should consider this level as a potential level of final support. If you look at the whole history of Bitcoin, you're going to see that we only have the 300 weekly from around 2016, and we have touched it only in COVID. So if we were to touch it again, that will be located at 17.8. Does it need to be the final bottom? I'm not saying that. It could go way beyond. Anything can happen. This whole market that we are having here is a complete anomaly compared to the previous cycles. We have talked about that in the previous videos. We are already staying below the 200 for too long. Some good things are happening. We are forming some sort of double bottom here, which is amazing signal in the sense that it's bullish and it's got a good ratio of success. But I'm saying if those signals still fail, because everything has a chance of potentially failing, we could revisit the 300 weekly moving average. If you don't believe me that models are changing and we are in a complete anomaly, you can see the logarithmic model has been always from bottom to top, bottom, top, bottom, top. It's been every year like that. But this man here, this COVID, spoiled this top and now is also causing anomalies to the bottom. So that's something that you need to have in mind. You cannot expect Bitcoin to do exactly the same things that it did before because it hasn't been doing any of that during this whole cycle. In terms of bearish divergences from the Hive applied to Bitcoin, on the daily, we had a signal around 30th of July that has, let's expand this, that has already played out. It triggered at 23K and it target 20.7 and it got filled precisely by the dollar, as you can see there. It went beyond, but it bounced at the target. On the 4-hour, we had a signal more recently on the 12th of September, and it hasn't been fulfilled. The price has carried on going up. The target is 20.7. So if price sold out here, this should at least fill this area. On the 1-hour, we have also a signal on the 9th of September pointing to 20.4. This signal is already on a 6% drawdown. The Bitcoin dominance is doing something extremely interesting. First of all, you have these two levels. This one is a level of support right there at 40%, and you have a final level of support at around 35.6. If we zoom in, we can see how many times we've been bouncing around the 40%. We started doing an uptrend right there. It got broken. There we got to 39%. And from there, we started bouncing to the upside. Bitcoin is very sold out. And what I'm expecting to see on Bitcoin is value going back to Bitcoin. Potentially, some of the value post the Ethereum merge could come back into Bitcoin. Ethereum is at a very delicate moment right now, so it fully depends on how well it performs the merge. But even if it goes well, some of the value that Ethereum has been catching could come back into Bitcoin. Ethereum dominance is on a way up. On the 26th of June, when Bitcoin was coming down, Ethereum was coming down as well very aggressively, but it managed to find support on this trend line. We reviewed that in one of the private videos. Before we touched this level, we were speculating whether we were gonna manage to hold on this trend line, and it's exactly where we found support. Now we are at one of these levels that could prove to be a strong resistance. So that's around 20% Ethereum dominance. So the dominance could come back down and retest this trend line, and that will mean Ethereum losing quite a big portion of the dominance, and that could go back into Bitcoin. I'm using these two new indicators that they draw automatically Bitcoin bottoms and Bitcoin tops. It's really useful. You just need to search by double, and there you got it. Double bottom chart patterns and double top chart patterns. I think they are built in on TradingView, so they are free. And if you plot Bitcoin on the weekly, you can see these double bottoms on each of the bear markets, showing that we're going higher, and double tops exactly at the top of this market, showing that we're going lower. I'm very hoping to eventually see here the formation completed, so the indicator can also show here a double bottom. Of course, the scale of this double bottom is not comparable to the size of these two other ones we had previously, but believe me, I take it. It's incredible to see how Bitcoin is doing very similar things on every cycle. I keep staring at this chart and I'm impressed on how similar it looks with the Fibonacci moving averages in a logarithmic chart. Look how you find support on the gray line and starts going sideways. It's the same here. It's also the same here. Support and then to the side. Support to the side. Support to the side. This was early days. We went beyond that, but eventually we started going sideways. Just mathematics are really beautiful. Alright guys, I hope you found all the information that you need to decide how is the market performing right now. If you like this content, please consider subscribing, hit the like, and the best thing that you can ever do for this channel is leave a comment. See you on the next one. Take care. Bye bye.